Hello guys, welcome to the Trading Parrot. I'm gonna do the market close update and I'm gonna focus on this recent price action of today, this bearish move on the daily and the 4-hour time frames, and how much is threatening to re-enter the previous range on the daily and also on the weekly. We'll look into those levels of support potentially to see, assess if it's a good idea to enter on a long around there, buy the dip and expect higher prices. For that, we're going to focus on liquidation levels and directly focusing as well on the order book. We're going to do really forensic analysis to understand if these new levels are there to hold support or if they are going to get slightly deeper correction. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes? And someone was asking, only the big channels get 1,000 likes. I was checking my statistics and I noticed that I have gotten over 1,000 likes around 10 times in all the history of my videos. So we're talking about 1,000 videos. That's what I have done, and only 10 have gotten more than 1,000 likes. But guys, I think that you can change that, and if you do, that really helps for the YouTube stupid algorithm to show the videos to new people. Actually saying that the bears have been putting on significant pressure with strong volume over the past 5 days. We're seeing here the cumulative net taker volume over the past 24 hours. There's 1.3 billion in taker volume. That is basically people that go into the market without a limit order, selling pressure, panic sellers. More recently, 800 million, and all the move to the upside from the breakout in here. We saw the opposite. The CVD was spiking in here, the net taker as well. This morning, I gave you an update on the Bitcoin status, and I mentioned that the 4-hour was in red and the daily was in gray. And the reason I kept the daily in gray is because there is the potential for the daily to just come below 107 and reclaim 107 before the daily close, and that turning into just a liquidity hunt. Why am I thinking like that? Why wouldn't I? That's the only trick that they've been using every single time since we broke from 74 all the way up into 112. Market maker hasn't been really creative. All it's doing is putting bearish patterns, letting them break down, and then trapping all the late shorts and continuing with the trend to the upside. That's why I got tempted to keep it in the gray. But don't get me wrong, if we break the 105k and we continue beyond, that is a lot more than just a liquidity hunt, particularly if we go into certain fair value gaps that are below the price. We're gonna go into that in detail in a moment. For the people that think that I'm bearish, this is the daily in neutral, the 4-hour is in red, and the weekly and the monthly are still strong in green. The weekly could turn into neutral if something happens that I'm gonna show you later in the video as well. It is at times as this where we are starting to see a little bit more of a pullback, when we kind of remember, do we have any CME gap below the price? And the answer is yes, we have one right there at 99.4. That CME price. Let me give you the prices on Binance because you're probably not gonna know how to translate that into exchange price. So 99,164 is on Binance, 96,800 second fair value gap, CME gap, sorry, 91,600 is the third. Now let's focus on the 4-hour. What's going on at the moment? There's still 30 minutes for this candle to close. So this time that I'm recording is very important to decide what can happen next. So 4-hour has a chance, right? So there is half an hour for this that has gone all the way to 105.6. Let's be creative. Imagine in half an hour, the 4-hour comes back up above 107 and everybody says, but WTF is going on with the price? And I wouldn't be surprised because that's pretty much happening all the time since 74. All these areas that look pretty flat have been full of head and shoulders, double tops, inverse cup and handles, you call it, retail traps with patterns that are very well known, that are constantly trapping the shorts. People wait for the breakout and we continue to the upside. So in this video, what I'm gonna do is I'm gonna tell you what could happen if we reclaim 107. If we don't do it in the next half an hour, probably the video is gonna be already out by then and you're gonna be watching it. If we don't, this breakdown could continue to the downside, potentially even achieving the technical targets of the M patterns that we are seeing for the first time in the whole rally. Right, so Bull case, what we need is really for this 4-hour RSI to form a double bottom. Yeah, it's always the same thing, right? If we form a double bottom in here and we break out above 48 RSI, then we increase substantially the likelihood that we are going to literally carry on to the upside in here and go and hit next levels of resistance. Starting with the fair value gap at 109.5, which I mentioned this morning. So far, the price is putting a lower low. If we could reclaim just a little bit higher the price so that the RSI prints an early bullish divergence, that will be fantastic as well, and will be a very, very, very early indication that we are on our way to put that double bottom that later can turn into a breakout. At the time of the breakout, I don't take the trade. So if I'm gonna take the risk is now to take that long. Let's look at, of course, at the order book to see if that risk is worth taking. From the point of view of technicals, that could be a good narrative, but from the point of view of the order book and all that manipulation going on under the carpet, that could be a different story. Right, so that 48, that resistance is this orange line from the reverse RSI, and let's change it to actually 48. So that is at 48, and let's see how high we need to claim. So if we go beyond 107.9, then we are literally forming a double bottom and already breaking out. I don't like trading the breakout. I'm gonna repeat that 1,000 times because this breakout fake out very often. What I like to do is bet on a narrative that hasn't happened yet, start building a position, and once we get to that resistance, pull out if it's not healthy at that point, or if it looks promising for continuation, I keep my position and I keep going. In that way, you avoid loads of losses. And if this carries on going lower from where we are, then I look for averaging down at some other area of very good quality, which we haven't talked about yet. So far, what we have done is to fill this fair value gap at 105.5. The other thing that we have done is on the daily to come and give a kiss of a perfect retest of the top of the range on the volume profile. That is fantastic. That is precisely what we will need to continue to the upside. But just to give you some additional context, this is an ascending wedge, it's a bearish pattern, and we just broke down and we just got started with that. So hold on the horses and let's see how we react to that 105.7, because obviously if we come back below and we go into the next support at 103, 170 coming from the RSI, I'm going to show you why that is support in a second, but coming back inside and staying there over a day, 2 days, it starts getting very dark in terms of forecast. Why? Because when you go to the top of the range and you lose the breakout area, come back in the previous range, you tend to at the very least fool around with the point of control, which is the area of most volume traded, usually in the middle of the price. At that point, we will be at around 96.7. If we can go to the point of control and prove that this volume is holding the price and then carry on to the top, that is perfect. After all, that point of control didn't get any love from the price. We broke it with this massive green candle and never came back to retest it. So we could come, retest that, kiss that, spend some time with this order block, which is a bullish one, and then continue to the upside. That is a potential outcome. Going below the point of control, of course, is the bearish area of the range, and that almost guarantees going to the bottom of the range, which is 85k. You can see in here, losing the point of control, boom, everything gets lost and everybody throws the towel, particularly all the bulls. So on RSI, that red line that I put on the order block, it's coming from an RSI of 48 that has been holding the price in here, and since now we are kind of puking here after holding this line, if we close the daily like this, well, pretty much we're gonna just make a move up, fill some fair value gaps, and then carry on into 48 with a high likelihood. After all, the MACD continues to increase the speed of the momentum into the dark red, and the mouth is very wide open after putting a bearish cross here at the top. If you remember from a few videos in the past, I talk about the cross-V ratio, and here you have one top on the daily, here you have your second top in the red, and here we have the third top. One coin sits with 73k, the other one with 105, and the third one with around 112. On the weekly, interestingly, that top of the range is not 105,700 as the daily. In this case, it's a little bit lower, so the weekly time frame can allow allow the price to go slightly lower and still stay bullish without calling any alarms. We can go even into 104,500, roughly 1.3k lower than on the daily without re-entering any of the previous range. We can even during a week spend some time here at 100k, take that liquidity that I'm gonna show you in a bit and come back up above 104.5, and we could say, okay, we can breathe again and carry on going. After all, the bull market support band is putting a bullish cross in here. We have had already some stochastic crosses, MACD, bullish crosses, and everything on the weekly that we had covered in previous videos. These bull crosses have been coinciding with very bullish moves on the bull market. But make no mistake, it's not always the case. At 48k before starting the bear market, we put a bull cross right here before making a move of 67% to the downside. So don't take for granted that every stupid bull cross means money. If you do that, at some point you're gonna lose it all. As simple as that. And the CPR, second resistance, is currently doing the trick to keep the price respecting it. We can see that we claim it, then we came back down, then we retested, we got rejected, we put a double top, and we are breaking from the neckline of 107. That's what we are doing. The target of that on the daily is to go to the next CPR resistance of May. May, it's about to end. We just have 2 more days and we're gonna get new CPR levels, which I suspect, thanks to this uptrend, the pivots are gonna be located somewhere in here. And this month was purging, so it's good to have those CPR pivots a little bit higher and then lose virginity at a higher price instead of having to go to the May ones that are way low than I want to go. This is 91.4. So good to be closing the month at these highs and let those CPR pivots come as soon as possible to retest them and then carry on with the uptrend. In the past 2 days, I've been showing you how the Big Well Explorer is shouting that there is 33,000 deposits from large holders coming into exchanges. This is this red bubble coming in here. I show it to you in every single video. I do shorts about it, I do tweets about it. And if you go to my Telegram charts that are found in my Telegram channel, link is in the description. You just click on charts and you request the chart. You can get 1 or 2 charts, I think, a day for free with all the annotations, with any of the charts I'm showing you. And of course, if you want to support the channel, you can get 3 months, 6 months, or 12 months and get unlimited access to all the charts, all the goodies. We're still interestingly marking greed at 74, almost extreme greed, with the price coming down. And also this morning, and particularly we noticed all these things during the live stream. We had an elite members from Patreon private live stream that is gonna come out tomorrow publicly for everybody. And we were talking about the price action and how they were holding the price to not cross 109. I'm gonna show you that how was that looking later in the video. And I think that resistance that they were placing at 109 was to do with these degens that were placing their liquidity right here. You can see it from 25x to 100x leverage was located on all these areas. So far we have consumed probably half of that. There is still remaining bits up until 105 and $100. If I include the 10x's, then we get these dudes that placed their liquidity at 113, and so far they did the right choice because the price hasn't managed to go after them and instead it went for the degens. Tell me about it. That is kind of the case all the time. Price chases first, as a rule of thumb, the people with higher leverage. And if we look back down and we go to 105 and we don't reclaim quickly that, if the retest of the daily top of the range doesn't hold, well, you got served on the table this pretty liquidation level of 100 and 600 below the price. If we hold it, then we can go later for the 113 and put a new all-time high. After all, we are leaving the largest liquidation pool in all the range of Bitcoin from 112 into 115. So far, the liquidations of today are reaching a pretty substantial number, but not as high as the 23rd of May. That was really big. So let's have a look at where is the liquidity. Here I'm using Market Monkey Terminal. Make sure that you watch my live stream. Recently, we did it with the owner and builder, entrepreneur Anthony, that built this beautiful tool, and you can see where was the liquidity holding the price here at around 106. And now there is some support located at 105.5. Earlier today, this is the 1 minute time frame, and while we were in the live stream, we were talking about this area in here of orders. This is around the 110 and how they were defending not to cross above that 1k followed by 900k followed by 500. It's a lot of resistance for the current volume that we're seeing in the market. When the price went up, they slightly moved it higher and the support was very little, and we carry on going lower until we hit these levels of 107. That was not enough, and it continued puking lower. So let's see what's going on at the moment. Let's zoom out and let's see where is the resistance. That resistance is still at 109 and the support is right there at 105.5, and I don't blame him. Basically, there is an opportunity around here to hold support on the daily and carry on going higher. And I'm even a little bit tempted to tip my toe into a long right there in case we reclaim this and we go way higher. I don't think that is that bad idea. After all, we are in a bull trend and we can DCA somewhere around here if that doesn't work really well. But again, no financial advice, just my train of thoughts during an evening where I'm pretty tired after having made so many videos. So we could say that there is some decent support. We're going to look into the ratio of the ask versus the bid to see if these numbers are kind of canceling out or if there's a clear advantage for the longs or the shorts. So for that, I'm going to go into high block capital and I'm going to focus just on the bid versus ask ratio, which I'm very used to reading. It works pretty well for me. So here you can see that the 0.8 kind of held this pattern and turned it into a double bottom. In this area in here, we're coming down and we are starting to see 0.08. So not as high as all of that. That took a lot of time in here to settle before deciding to come back up, and still the technical target couldn't be achieved, which should have been around 112. It barely made it half of that. But you can see in here, 0.1 did the trick in here. 0.09, 0.08 is currently the average of this. So some longs are stepping in and they're placing more limit orders to buy than to sell. The resistance at these highs is clearly obvious, and if we focus on what the whales are doing, the top there, the brown, is the biggest one, the second largest one is the purple, which is actually the one that kind of leads the pack. And the purple at the moment is pointing down. So that doesn't mean that they might not change their minds eventually, but so far they are in sell mode. And in terms of fair value gaps, we can see that we left the 109.5, which I already mentioned earlier in the video, and now 107.4. It's right there and serves a very specific role. If we come back up in here, then we meet with the resistance of the previous support, right? We are allowed to re-enter, take the fair value gap, come back down, close below 107, get rejected, and carry on. That is the bearish narrative of this. The bullish one is come back up, take it, carry on slightly higher, retest 107 as new support, and carry on into 109. That is the most typical pattern, not necessarily the only one. And if you take a Fibonacci trend retracement in here from the all-time high back down to this swing low with the double bottom and then going back into 110 and the rejection, the extension of 1 takes perfectly this whole fair value gap, which by the way, we are kind of halfway through filling it. So if we take this retracement here and we say, what if we just do a mild one and we hold the previous resistance? We just came here to test new support. Well, that's where we can bet on a long around 105. If we go deeper, the golden pocket is currently at 102, which is the previous support of the previous range on the 4-hour time frame. Losing that puts on the table the largest and thickest fair value gaps on the lower end. That's definitely, at least the second half, is some areas I do not want to go to prevent breaking monthly or even weekly time frames. And I'm looking at the general markets just to see if this is being caused by something horrible going on in here, but actually I don't see that much of trouble in here. I will say that everything is kind of canceling out. Let's have a look at the Nasdaq, and the Nasdaq is pretty much where I I left it yesterday. S&P as well, we are just against that resistance. And I just noticed that the Japan 2 to 5 daily is doing a breakout on the weekly, the Nikkei. Although the price hasn't done it, the RSI is pretty much ripe in here for a move up. It's just retesting, and potentially if it could give a higher high in here with the price reclaiming 37,891, we could see a rally on Nikkei. I wonder how their yields are going to affect this, because they also have some trouble in their economy. Not the only country, by the way. Guys, if you want to trade $500 on any of these coins for free and then get to keep whatever profits you make with those $500, then there is a link in the description for Bybit. If you click it and then hit register to claim, then you can do just that. If you want to stay non-KYC and prevent all the hassle of doing that, just deposit in 30 seconds, be ready to trade with leverage and all coins and everything. Use my link for Bluefin. You're supporting the channel and you get a chance to win up to $10,000 depending on how much you deposit and your trading volume. And guess what? You can use that as well. Your Bluefin account, you can use it to not have to pay for any of my indicators. Just scan the QR code and follow the description instructions that are right in front of you in the screen, and you can claim both of these things for free. Isn't that great? Thanks so much for watching. And yeah, I'm reading some comments from my Patreon members and they're asking if it's holding strong. And yes, I actually agree, because interestingly Bitcoin was putting lows, but Ethereum was doing a pretty decent move of 2% plus today. If we look at Ethereum BTC, you can see in here that still on the day this is a move up. Very interesting to see that, and that is actually positive if we can hold this trend for all the altcoins. Particularly on the daily, we could see this, let's say, cap and handle breaking out from here into 0.3389. That could be the potential next target for Ethereum against Bitcoin, which is sometimes really cool because the whole market can move down because of general markets, but you're trading BTC against Ethereum and accumulating on whichever you want every time that you can take profits. In this case, this cap and handle is pointing there, it hasn't broken out, so there's no confirmation, but it's something to keep an eye on, particularly if in a couple of days we see Ethereum sitting at, let's say, 25.76, and I'm talking about the price, the ratio against BTC, of course, and retesting, then we can get possibly a 32% over Bitcoin, which is awesome. All right, now I really have to go. I hope you enjoyed the video. Write down a comment down below, hit the like, and I'll see you tomorrow. Take care. Bye-bye.